Hello students, in the last session we saw some special type of transactions like repurchase agreements and bill and hold arrangements. So those are the different types of transactions that can be had in the topic of revenue recognition. Now we come to a separate part of revenue recognition which is dealing with contract cost. So let us take up this contract cost and see how to calculate the revenue which is to be taken for the current year. Now contract cost, why it becomes special for revenue recognition topic? Because the format of solving the questions is slightly different from what we have done up till now, and there are certain steps to be followed. Contract cost is we have more importance given to that because of the fact that a contract may spread over number of years. So when we talk about performance of obligation at a point in time and performance of obligation over a period of time, this particular contract sometimes is spread over more than one accounting year. So how to account for the profits, how to account for the revenue of such contracts which are spread over more than one accounting year, that is what we are going to study now. Okay. So let us come to this revenue recognition part of this contract cost. For a contract with a customer where revenue is recognized over time, there are three important rules to be aware of. So what we are saying is that we have to follow certain rules and regulations regarding the recognition of revenue. The first rule that we have to follow, that if in a contract we are having or we are expecting some profit, then what is to be done? So the first point, if the expected outcome is a profit, normally that should be the first point because nobody enters into a contract with the expectation of a loss. So we expect that there is a profit in the contract. Then in that case, revenue should be recognized according to the progress of the contract, depending upon how much percentage of the contract is completed. Now talking about percentage of contract to be completed or the percentage of work that is completed, we are having two methods of measurement here. The two methods of measurement are, first is input method and the second is output method. Let us take an example, just for the sake of taking some numerical values. I have to prepare 10 kilometers of a road. I've got a contract to prepare 10 kilometers of a road. Now, at the end of the year, I find that only 4 kilometers of the road are completed. So, on the basis of the output that has been generated, I will say that 4 out of 10 kilometers have been ready, have been constructed in the current year. That means 40% of the work is completed. On the other hand, suppose for construction of a road of 10 kilometers, I require, let us say, 50 tons of cement or concrete. 50 tons of cement. Now that 50 tons of cement that I require for 10 kilometers, at the end of the year, if I am able to use just about 20 tons of cement, then I will say, out of the total 50 tons that I required, I have used only 20 tons. That means 20 out of 50, it comes to 40%. So I can use the measurement on the basis of output generated, or I can use the measurement on the basis of the input that has been consumed. Okay, So on the basis of that, I will be calculating what is the percentage of work completed. Second, if the expected outcome is a loss, revenue is recognized according to the progress of the contract. There is no change in that. So how much of revenue to show in the current year depends upon the percentage of work completed. But the whole loss should be recognized immediately, keeping in mind the principle of conservatism that if we are anticipating a future loss, we have to make a full provision for that loss. But if we are anticipating future profit, we cannot make a estimation or a provision for that future profit. So, if there is an expected loss, the whole of the loss has to be provided for immediately. Third case. First is that if the outcome is expected to be a profit. Second is if the outcome is expected to be a loss. Third is if the expected outcome is not known, is unknown, then revenue should be recognized to the level of recoverable cost. That means revenue should not be on progressive basis. Revenue should not be on the basis of how much of work is completed. But revenue should be based on what is the actual cost incurred up to date. Only to that extent. So if I spent about $165,000 up to date, my revenue will be $165,000 and my cost will also be $165,000. So no profit, no loss. Okay? So that is the way in which we are going to show the revenue if the outcome is not known or is doubtful. And contract costs should be recognized as an expense in the period in which they are incurred. Okay? So there is a format that we have to follow. Let us see the format. The format is like this. I suppose you can see step number 1, calculate overall profit or loss. That means first I have to find out what is the estimated profit or the estimated loss for the contract as a whole on completion. So step number 1 is to calculate the overall profit or loss, meaning on the completion of the contract, what is the estimated profit or loss. How do I start? The total contract price minus from that the cost to date. So I start with the total contract price, less from that cost to date, that is whatever cost is incurred up till the current year, and minus the cost to complete. This will be further cost. Okay, this will be the further cost that I am likely to incur. So first I will take the amount of contract price, the total contract price, minus from that the cost to date, that is whatever cost has been incurred up till date, and again from that less the cost to complete. Now the cost to complete will be the estimated cost till the completion of the contract. So I'll just write over here estimated further cost. Estimated further cost. Okay, so actual cost incurred up to date and then estimated further cost. Okay, so this is how I start with the first step. That will give me the overall profit or loss. That means if I am having a profit, it will be a positive figure. If I am having a loss, it will be a negative figure. Right? Now, so step number 1, I have got my estimated profit or loss. Step number 2, Determine the progress of the contract. How much of percentage of work is complete, as I told you, either on the basis of the input method or on the basis of the output method. I will get the percentage of work that has been completed up to date. Step number 3, we will prepare a statement of profit or loss. Statement of profit or loss will show the revenue for the current year on the basis of the progress of work completed. So the second step will give me the percentage of work completed. So that percentage of work completed multiplied by the total contract price. You can see here, total price multiplied by the progress percentage of work completed. Less from that, revenue recognized in the earlier years. If you have already recognized some part of the revenue in the earlier years, that will be subtracted. Cost of sales, that is total cost up to date, whatever cost is incurred up till the end of the year, minus the cost of sales incurred up till last year. That will give you the profit or loss for the current year. Okay, that is step number 3. Step number 4 will then decide as to whether there is a contract asset or a contract liability in the balance sheet. So from the earlier steps, you will come to know what is the amount of revenue receivable. Then from that amount of revenue receivable, you minus the amount that is already received. The balancing figure is the net amount receivable. Let us say, for example, your revenue receivable for the current year is $500,000. You have sent a bill of $400,000 for which payment has been received. So out of 500, you have received 400,000. So 100,000 is receivable. Anything that is receivable is an asset, and that will be called as a contract asset. Right? We don't call it as accounts receivable, we don't call it as sundry debtors, but we will call it as contract asset. Let us assume that the revenue receivable for the current year is $500,000, but the customer has paid us $600,000. So he has made excess payment of $100,000, for which there will be a contract liability. There will be a contract liability. So a contract liability will be in negative. 500 minus 600, it will be a negative figure. Okay. So this will be the contract liability. So like this, we will be having questions based on contract costing, where we have to find out what is the percentage of work completed during the current year, accordingly show the revenue, accordingly show the profit. Okay, so now let us go to questions which I have taken up in the Excel sheet, which are from your Kaplan material only. We will be solving examples from there. Okay, so we can understand as to what type of questions are coming and how to answer those questions. Let us go through the Excel sheet. I suppose you can see my Excel sheet now. I have written there TY4, that is Test Your Understanding 4, which has been taken from the Kaplan material of FR textbook. Okay, so let us go through the question first. What they have given is, on 1st of January 20X1, Baker entered into a contract with a customer to construct a specialized building for a consideration of $2 million. So that is the contract price, plus a bonus of $0.4 million if the building is completed within 18 months. Estimated cost to construct the building was $1.5 million. That is the total cost. If the contract is terminated by the customer, Baker can demand payment for the cost incurred up to date plus a markup of 30%. That means in between, if the customer stops the work and says that I am not interested, I am not going to pay, then whatever cost has been incurred up to date plus 30% can be recovered from the customer. On 1st January 20X1, as a result of factors outside of its control, Baker was not sure whether the bonus would be achieved. The very first starting part of revenue recognition. I told you, if you have been following all the lectures serially, I have told you that for any revenue to be recognized, one of the steps is that you should be having the probability that you will receive the revenue. So until and unless the revenue is probable, you cannot recognize it. Just go to my very first lecture, you will find that revenue recognition part 1. That revenue recognition is possible only if there is a probability that you will receive the revenue. So here what they are saying is that Baker is not sure whether the bonus should be achieved or not. That means whether the work will be completed within 18 months or not. So that $0.4 million is not guaranteed. I'm not saying that entire consideration is not guaranteed. That $0.4 million is not guaranteed. That is clearly given. Whether the bonus would be achieved, that is doubtful, not whether the consideration. So in that case, the consideration of the contract, the total contract price would remain $2 million. Okay? On 31st December 20X1, Baker had incurred cost of $1 million. Expenditure up to date is $1 million. They were still unsure as to whether the bonus target would be met. Baker measures progress towards completion based on the cost incurred. Total cost is supposed to be 1.5. We have already incurred a cost of $1 million. So it is on the basis of input that we are measuring the percentage of work completed. Okay? On 31st December, Baker has received $1 million from the customer. Okay? These are the details given to you. So now let us see how to write the answer. Answer I have given to you here. I have worked out the answer. We start first by determining what is the transaction price. Is it $2 million or 2 plus the bonus of $0.4 million? Now, in the question they have very clearly given that the probability of receiving the bonus is not likely. And the bonus was receivable only if the project could be completed within 18 months. That means it cannot be completed within 18 months. Right? Now, we start the answer by saying bonus is a variable consideration and hence it should not be considered as a part of the contract price. Saying that, I'll start with step number 1. What is step number 1? Calculating the overall contract profit or loss. So I start with the total contract price, which is given to me in the question as $2 million. Less from that, cost up to date. That means whatever expenditure has been incurred till the current year. That is very clearly given to me in the question as $1 million. You can see that they have very clearly given in the question that the company has incurred $1 million. Okay, what is the estimated cost then? Likely to be incurred in future. Future estimate. Total is given to me as $1.5 million. Out of that I have incurred $1 million. So what is the estimated further cost to be incurred? $0.5 million. And $0.5 million is nothing but $500,000. So I have taken the contract price $2 million plus cost incurred up till date $1 million minus the estimated cost $500,000. So the total estimated profit on the contract is likely to be $500,000. That is $500,000. Okay, that is step number 1. So you know that there is going to be a profit. Step number 2 is percentage of work completed. On what basis are we calculating? On the basis of cost incurred, right? Which means on the basis of input method. How much is the cost incurred up to date? $1 million. What is the total cost likely to be incurred? $1.5 million. So $1 million divided by $1.5 million into 100, that gives me a percentage of 66.666%, which means 66.67%. Or if I want to keep it in fraction, it will be 2/3. Okay, so 2/3 of the total cost has been incurred. That is step number 2. Step number 3, statement of profit or loss. We are going the same order as what has been given in the book. No change. Absolutely no change. Statement of profit or loss. Contract price we have taken proportionately. What basis? 2/3 or 66.67% of $2 million. 2/3 of $2 million comes to $1,333,333. That is a proportionate amount of revenue recognized on the basis of the percentage of work completed. That 2/3 has come from here. Okay. Less from that, the cost incurred up to date in the current year, that is $1 million. So 1.333 minus 1 million, your current year's profit that you can show in the profit and loss account is $333,333. Correct? So step number 3 is over. First we started with estimation of total profit. Second step was calculation of percentage of work completed. Step 3 was how much profit to be shown in the profit and loss account. Step 4 is what to show in the balance sheet, statement of financial position. In the statement of financial position, I will show what is the amount receivable. Amount receivable is the proportionate of revenue recognized in the P&L account. You can see this figure, the same figure I brought down here. $1,333,333. That is receivable. How much has been claimed to be received? It has been given in the question. Company has received $1 million. So less from that amount, receivable amount, the amount received, that is $1 million. So the contract asset amount receivable. What is the meaning of contract asset? Amount receivable. Amount receivable. Okay. So this is coming to $333,333. That is amount receivable. It's a contract asset. Correct? I suppose this is clear. So we have gone stepwise. Step number 1, total profit. Step number 2, percentage of work completed. Step number 3, statement of profit or loss. And step number 4, statement of financial position. Clear? Any doubts which are there, you can please feel free to contact me. First, write down these solutions, copy down these solutions as they are being done. You should be having a proper notebook. Don't come to me with soft copies of your material. You have to ensure that you are writing down these particular solutions in your notebook. When you are coming with a difficulty, come with your notebooks, not with your laptops, please. Right? Because I want you to solve these questions on paper. Next one is test your understanding number 5. Similar question. On 1st January 20x1, Castle entered into a contract with a customer to construct a specialized building for a consideration of $10 million. That means you are having an asset to be constructed, you are having some particular building to be constructed, and the cost of construction is $10 million. Okay? Now, that is the contract price, total contract price. Castle is not able to use the building themselves at any point during the construction. That means it is not having any alternative use for the entity. That was one of the points that we said. No alternative use. On 31st December 20X1, Castle had incurred cost of $6 million. So the $10 million is your contract price. $6 million is what you have incurred up till now, up to date. Cost to complete are estimated at $6 million. So further cost likely to be estimated $6 million. On 31st December, Castle has received $3 million. How should this transaction be accounted for in the year ended 31st December 20X1? Okay, now let us see. We go step by step. Step number 1 is to find out what is the total contract profit or loss. Okay, so how do I do that? How do I start? I start by saying that let us take the contract price. What is the contract price? The contract price is $10 million. What is the cost incurred up to date? You can see everything is here, 6 million and 6 million. Cost incurred up to date, $6 million. Minus estimated cost for further expenditure, $6 million. 6 and 6, 12. So 10 minus 12 is minus 2. Minus 2, it is not a profit then. It is a loss. Minus 2, it's a loss. So this loss has to be what we said. Revenue we will take if the loss is, if the total contract is giving us a loss. Revenue we will take proportionately, but loss has to be compensated for fully, wholly in the current year. Correct. So below that I will write this statement. All statements, all workings will form part of your answer, without which you are going to lose marks in the examination. So I will write there, since there is an estimated loss, the company has to provide for the entire loss in the current year. Okay. Now, how we are going to provide? Let us see. Step number 2. I am not going to break the steps. Step number 2. Just because there is a loss, my steps don't change. My steps will remain the same. Step number 2 is percentage of work completed on the basis of total cost. 6 plus 6, total cost is $12 million. How much is already incurred? $6 million. So $6 million divided by $12 million, the percentage of work completed comes to 50%. Clear? Then coming to statement of profit or loss. Statement of profit or loss, remember, the objective is to have a net loss of $2 million in the statement of profit or loss. Now how to get that, we will see. I start contract price, proportionate amount. Total contract price is how much? $10 million. Percentage of work completed is 15%. So 50% of $10 million is $5 million. Total contract price $10 million. Percentage of work completed 50%. 50% of 10 million is $5 million. Minus cost incurred up to date. How much? $6 million. So these two figures are known. So 5 minus 6 is already giving us a loss of minus 1. 5 minus 6 is minus 1. But I want minus 2. I don't want minus 1. I want minus 2, because the loss that is estimated, we have to make full provision of this $2 million. So end balance I know. I want this to be $2 million. So this particular figure is my balancing figure. This is my balancing figure, which will be called as provision for loss. Because I have to show a net figure of $2 million. How to get the $2 million? I'm having 1 million. 5 minus 6, I'm getting 1 million loss. How to get 2 million loss? Make a further provision of 1 million. So provision for loss, balancing figure, minus 1. So now when you calculate, it is 5 minus 6 minus 1. Minus 1 is minus 2. Clear? Then we come to statement of financial position. Amount receivable is contract price, which is directly taken from the statement of profit or loss. From here it will come here directly, 5 million. Less amount received. How much they have received? They have said received is $3 million. So $5 million minus $3 million. That is going to be your contract asset. For the receivable, anything receivable is an asset. So it is going to be 5 minus 3, $2 million still receivable on the contract. Clear? So when you are solving the problem now, whenever after you finish a particular step, pause the video, copy down that step or work it out yourself and then continue with the video. Okay? I suppose this is clear, all the workings. Fine. Let us take one more example. Test your understanding number 6. Why I am doing contract costing on a larger scale? Because it's very important. From college exam point of view, it is important. From ACCA exam point of view, it is important. And Kaplan material has got some excellent problems, excellent questions from which we can get good practice. That is why whenever anybody asks me which is the best material, I always say it is Kaplan material. Okay? So, let us go through the question. On 1st of January 20x1, Amir entered into a contract with the customer to construct a stadium for a consideration of $100 million. The contract was expected to take 2 years to complete. On 31st December, Amir had incurred cost of $24 million. The contract price is how much? Contract price is $100 million. What is the cost incurred up to date? It is $24 million. Costs to complete are estimated at $20 million. The further estimated cost is $20 million. Cost up to date, $24 million. Amir purchased the plant. In addition to these costs, Amir purchased a plant to be used on the contract at a total cost of $16 million. So that is going to add to the cost. So you are having $24 million, $20 million and another $16 million will be the cost of the plant, because that is purchased especially for the contract. This plant was purchased on 1st January 20x1 and will have no residual value at the end of the second year. Depreciation on the plant is to be allocated on a straight line basis across the contract. What is the life of the contract? 2 years. So I have to charge depreciation for 2 years. So $16 million divided by 2 years. So depreciation is going to be $8 million. Okay. Amir measures progress on contracts using an output method based on the value of work certified up to date. And they have given you the output work certified on 31st December. The value of the work certified is $45 million. Customer has paid $11.4 million. All figures are given to you. You don't have to worry. But you should know which figures to put where. Right? Steps are same. Estimation of total profit on the contract. percentage of work completed, statement of profit or loss, statement of financial position. Steps are not going to change. You have to take these figures, put it in the steps. That is your only job. It's not difficult. So let us see. Step number 1. Total contract profit or loss. How do I start? Contract price, sir. So contract price is how much? $100 million. So I start with $100 million. What is the cost incurred up to date? $24 million. You can see that $24 million is here. Okay. Estimated cost, further estimated cost, $20 million, that is here. So when I subtract that, I will get $56 million. From that, further a plant that was specially purchased for this contract, $16 million. So 56 minus 16, the total estimated profit is $40 million. Total estimated profit is $40 million. What is the percentage of work completed? Given in the question, $45 million ka work certified. So work certified 45 million divided by total contract price 100 million. So how much? It is going to be 45%. Okay. So the total work certified during the particular period is $45 million and your total contract price is $100 million. So it is going to be 45%. Now step number 3. Step number 3, statement of profit or loss account. What do we have in that? Contract price or revenue on a proportionate basis. 45% of $100 million. Contract price, proportionate amount, 45% of $100 million. That is 45 million. Less cost of sales, whatever has been incurred up till now, $24 million. Less depreciation, 16 lakhs ka cost, divided by the life of the project, that is 2 years, $8 million. Life of the project is 2 years. The project is only for 2 years. You can see that. It is, everything is given here. 2 years to complete. Correct? So $16 million divided by 2 years. So depreciation every year ka $8 million. So your profit for the year is $13 million. 45 minus 24 minus 8. Clear? Then we come to statement of financial position. Now here there is one additional thing that you have to write. What is that? Non-current asset mein there is property, plant and equipment, where the initial amount of this is $16 million. Minus from that depreciation of $8 million. So you get $8 million as the net balance. Okay. Then you will have current asset, which is made up of contract asset, amount receivable $45 million, less the amount received, which is given in the question as $11.4 million. You can see that. As I told you, all the figures are given. You just have to write those figures here. $11.4 million. So the contract asset is $33,600,000. This is how you are supposed to solve the problems. So has there been any change? There has been no change at all. All my steps are the same. All my steps are the same. First step is finding out total contract asset profit or loss. Second step is percentage of work completed. Third step is statement of profit or loss. Only this additional item has come here because there is a new asset purchased. Then fourth step is statement of financial position. Because of this additional item has come here. That is it. right? So the entire topic of revenue recognition comes to an end with this contract cost. So any difficulties, I again tell you, solve these questions in your notebook, and then if you are having any doubts, you can always come to me. Okay? So we'll stop here and we'll continue next time with a new topic, with a different topic. Thank you.